Here we go. Hello everybody, my name is Wieland Arlt and I am so happy to be here together with you in Milan. And first of all, I like to thank, of course, Siad and Davide Bulgarelli for having me, for the kind invitation to speak to you. And I hope there's going to be some more here also just to join me with my presentation about how to trade the big swings in the markets, because what we see are a lot of big swings. But before we go into it, of course, there's a disclaimer, risk disclosure. Everything I tell you is, of course, my own position, my own idea of how to approach the markets. So it's more an impulse to think about, will you do this also? Will you apply it? Will you change it? And please think, when you trade on your own risk and your own responsibility, just to make this clear statement, right? So, if you all agree, I like to continue. So this is me, I teach you how to trade, that's the slogan. I am a trader, of course, technical analyst. I am author of several books, first of all in German, but also internationally wise. I'm president of the International Federation of Technical Analysts. I am member of the board of the VTAD in Germany, which is an association like SIAT. And I am, of course, speaker and trainer. I speak all over the world, go to China, London, Dubai, and I'm very, very happy to be here with you in Milan. And I'm world traveler, so I'm a nomad, and right now I live here in Milan, and next week I live somewhere else. So, let's go. What is it about when we talk about a strategy? First of all, what do we see here? What is this? Yeah, no, it's a chart. And what can we see on this chart? Some would say it's pure chaos, isn't it? Some will say, oh, there's a trend, there's an uptrend, there's a downtrend, there's a sideways trend. And I know, as traders and as technical analysts, we all have several ideas how to approach these trends, how to approach these markets, how to trade this chaos. And also, we have some people who like to trade breakouts. Of you, who likes to trade breakouts? It's pretty expensive, isn't it? Sometimes. Sometimes it can be very expensive. Who of you like to trade pullbacks? Right, it's the other idea. So we have several and a lot of strategies to trade the markets. And I had one question in mind, because honestly speaking, I'm a lazy guy. And I felt like, is there one single strategy that I can apply to all market conditions? If it's an uptrend, if it's a downtrend, if it's a sideways move, is this one simple strategy that goes for everything? And the answer is yes, there is. And I'm happy to present this to you, because this is really a strategy I trade mostly every day. Day by day, as far as I trade, I use that one. And it works perfectly for me. And as trading is individual, highly individual, of course, you are about to think, is this a strategy I could use, or will I trade something else? Because we have lots of strategies, right? So what do we need to know about the strategies? Of course, we need to have some ingredients, right? The first ingredient is, and I'm so thankful, I like to say that John Bollinger pays my bills. Of course he doesn't, but he invented something that I use on a regular basis, and these are Bollinger Bands. Who of you is familiar with the Bollinger Bands? Hands up, right. I love them because John Bollinger had a very, very simple idea, and it's so powerful. Let's hear him. Bollinger Bands are channel lines drawn in and around the price structure in a chart. Their purpose is to establish the relative definitions of highs and lows. Prices near the upper band are high, and prices near the lower band are low. I mean, okay, you can read this by yourself, but do you really understand what this means? What's behind this? Because usually in trading and in technical analysis, we are asking ourselves one simple question. Are prices too high? Should I short? Are prices too low now? Should I buy? But who of you can really say that an asset, a stock, a commodity, whatever, is really too high priced. It's not possible, because prices are not really something where we can say, okay, this is really the fair price. The market determines the fair price, but is this really the price it's worth? It's always a matter of, well, people buying, people selling. But is this really the price being too high? Is $69,000 too high for Bitcoin? I don't know. Do you know? Nobody knows. But people pay, or they did. Right now they don't. But this is the question I ask myself too. And with this definition that John brought to us, it's pretty easy, because he just said it's not absolutely too high or too low, it's relatively high and relatively low. And that's the magic. But the question is, relatively to what? And this is the basis of the calculation, relatively to the own average of the price. So if the price is far away from its own average, obviously it's relatively too high or too low, depending on the direction, right? And this is the magical point about this quote by John Bollinger. And that's why I felt like when I read this in the book, which I highly recommend, this is something that I understand. This is something where I feel like, yeah, it makes sense. Because it's not absolutely in it, it's relatively in it. So these are the Bollinger Bands, and as you all know them, these are the Bollinger Bands in the MIB. And what you also see, and John also made a test with this, that 90%, around 88, 89, let's say 90% of all prices are inside of the bands. Okay, given that. And also here, read a book, you feel like, okay, let's go over it, 90% I got it. But do you really get it? What does it mean if 90% of all prices are inside of the bands? What does this really mean? Or otherwise, what does it mean to the other 10%? If a price is not inside of the bands, doesn't work that much, but outside of the bands, like here, what does this mean? It means that these prices are far away from their own average. This means that these prices are outside of a normal range. And this has a consequence. And this consequence is pullback. And when I thought about this, I felt like, wow, this is it. So we have a situation where we have prices which are relatively low, like right here. This is the COVID low, by the way. Prices which are relatively low compared to their own average. Prices which are not in the average range of the 90%. Prices which are outside of the bands. And prices who are very, very likely to change direction. And now we're talking about probabilities. Now we're talking about taking opportunities. And now we're talking about how to enter a market into the exact opposite direction than it went before. So no breakout, which can be very costly, but counter move trading. And this is what feels like me. Yeah, I'm the guy going the other way. I like that. So, but of course, I don't just jump into the market just because price is outside. Just imagine I would have done this here. Would be very, very costly, even more costly than trading breakouts. So I need another ingredient to find the situation when the time is right to enter the market. And this situation is shown best by candlesticks. Who is familiar with candlesticks? I want to see all hands. This is basic. Everybody needs to be familiar with candlesticks. Why? Let's hear Steve. No other chart method can compete with the candlesticks when it comes to diagnosing the health of the market. It's like, are you alive? What's going on here? It's like putting the finger on the pulse of the market. It's like you're looking into the mind of the market participants. You feel, you see, you You get it, what's happening in the market, what's happening with the market participants, how they feel, and what they will do next. That's why I love candlesticks so much. So let's take a closer look at candlesticks. Candlesticks, my friends, show power. They show determination. They show security or insecurity. What is this? Is this power or insecurity? What do you think? It's power. It's domination. You have one big red or green candle. If you see a candlestick like this in the chart, what is your expectation for the next move? What do you think? You see a big red candle. What do you think? The next period, like I say, next day, what is most likely? Prices will drop or prices will rise? Who says prices will drop? Who says prices will rise? Okay, interesting. So of course, if we have domination, if we have picture of power where really sellers or buyers are in charge, with this domination in mind, the assumption is that the market tends to move in this direction, depending, of course, also where you find this candlestick. But imagine you have a resistance just going through this big green candle. And at the end of the period, the candle is so strong. What do you think? Resistance broken for good? Oh yeah. This is a sign of power. If you see a candle like this, I'm not so sure anymore. And now we're coming to a little bit psychology, which is behind the candlesticks. This is what we can see with the candlesticks. Because if we have the first one with power and dominance and domination, this one tells a different story. Because what happened here in a candlestick like this? What happened in this period under consideration? Of course, something what nobody really likes, but I'm pretty sure everyone experienced already. So market open, they go up or down, depending, and all of a sudden, for whatever reason, they turn direction and prices drop or rise, also here, depending on the direction you trade. And what happens here is that those who were winners at the end of the period turn out to be losers. What has happened here? What do you think? What has happened? Yeah, it's like, who knows judo? You know? Where people just, they throw over. That's it. It's a change of power. Something is wrong in the market. If you see a candlestick like this, you feel like, okay, somebody lost something. Somebody lost money. Somebody has been on the wrong side of the market and the wrong side of the trade. And this is what we can see right here. And if this is true for that candle, what do you think will happen with those? And if you feel like, okay, when I saw the first candlestick, this is a picture of power, this is dominance, this is really clear where the market goes. After that one, what will happen? What has happened here? If you see candlesticks like this, where you have just a very, very, very small body and a very long shadow. What is this?
Selling pressure that was overtaken.
Right.
The law of the market.
Exactly.
Something has changed.
Something has changed. And as technical analysts, we don't care what changed. We just see that something has changed. Everything is in the price. And what we see here is that this is a picture of pain. Because a lot of people experience a lot of pain. Just imagine you were the poor guy selling at the low. You made history already. Because you're in the chart forever. Right? Marking the low of the day. Forever. History. Nobody knows you, but you could say that's my pixel here, right? It's an NFT maybe, who knows? But anyway, so, and your experience, you sold at the low. By the way, who did this already? Who sold at the low, bought at the high? Hands up. We all did. So what happens? You sell at the low and then prices go up. For whatever reason, prices go up. And market changes direction completely. This means, and it closes like this with a very small body. What is going on in your mind now? What do you think? What's happening?
I think that you have to place a stop loss before enter your trade.
Yeah,
When you sell the low.
right.
So if you place a stop, then you go up to the market faster.
Yeah. First of all, you need a shrink. Doc, please help me. Second, you need to make a decision. And the decision will be, do you exit your trade? And most likely it is, yes, I will exit my trade. So you sit like on your mouse, on your computer, like, okay, done. I take the loss now. When will you do it? Of course, when the price goes above the high. Most likely, right? This is what we do. And those who were sellers become buyers. So what is the expectation if you see a candlestick like this? That the price goes up after that. Like,
Buyers, because your position add to other buyers which go long.
right, exactly. Exactly. So, and if you see a candlestick like this, you know, okay, something has happened. And this is the moment where you wanna get an action. And this is what we can do with the strategy. And if you see a candlestick like this, what does this candlestick tell you? Well, I don't know. It's indecision. You never know. It's like stepping on the brake. Okay, guys, we need some more information. Let's wait. We went some stretch. Okay, let's go somewhere. Not maybe somewhere else, but let's wait. Let's wait what happens, and then we move on, or we change direction. So we never know, depending where we can find such candlestick. So putting this together, these are for us and for my strategy the most important two ones. And they're called, everybody knows, hammer and shooting star, right? So usually you should know. And prerequisite is, of course, that we have for the hammer, you have a down move, and then you have a low, and then you have, for whatever reason, heavy buying. All the sellers getting squeezed out of the market, feeling huge pain. It's like cramping, you know, in your chest, or you feel a big headache because you're losing money and you can't help it. So this is where you want to go. You want to entry when the price goes above the high with a hammer and you place your stop loss below, which makes perfectly sense because if the market is not strong enough to follow the new direction, something is wrong. Maybe you're on the wrong side of the trade, and then it's time to exit, of course. And what I really like, I like to place a little buffer as an insurance because, you know, I want that the market proves to me that he's serious about his next move. Because I don't want to be fooled in or out. I leave a little space, like a point, a cent, 2 cents, whatever, some pips, just to make sure that I'm not the guy who gets fooled in and out. Yes, it costs a little bit performance, but it's like an insurance. You have to pay for it. So that's what it is. That's the deal. So, and for the shooting star, obviously, you need to have some kind of up move, then heavy selling, and all the dreams of the buyers get buried, and they have to make a decision as far as the low is cut. You want to enter that one short, and you want to place your stop loss above the high of the shooting star. That's the basic idea with the candlesticks. So if you know how to apply candlesticks the right way, you are already able to get bottom or top buying or selling. Where's the difference between these two? I hope you can see them. First one, is this a hammer? Technical analysts, CFDs. Why it's not a hammer?
Because the body of the candle is a little too high.
Excellent.
High to low range.
Excellent. That's what it is. Prerequisite, the size of the body and the size of the shadow is 2 to 1. Shadow, minimum 2 to 1. Otherwise, it doesn't have any such a big impact. Just a little, as we can see here, but not enough. Second one, wow, that's the hammer, right? And it does its job. It works. You want to trade from the correction? Here we go. Trend following in a perfect way, right? With a shooting star. So let's put this together. Let's go into detail. We have 5 minutes, so we go into detail. So what does John say? Of course, and he's definitely right, the touch of a band by itself is never a signal. How can it be? Of course not. And that's why I needed candlesticks to find the right entry spot. So what we can do now is we use the Bollinger Bands and the idea of, let's say, these 10% outside of the bands having a high likeliness of having a reversal, returning at least into the bands, returning at least to their own average or beyond, maybe to the other side of the bands. It always depends on the momentum. But for sure, first idea is that the price might return to its average, wherever it might be then. So it's a very dynamic approach, and it follows more the market than anything else. So let's take another look at the MBI. So we have Bollinger Bands here, and according to candlesticks, where are the entry points? What can we do here? How can we get some kind of order in this chaos? Right here. Guys, this is a weekly chart. No stress. Easy. Where's the signals? Here. Bearish engulfing goes to the middle, to the other side. Over here, not really perfect. Maybe we have a dark cloud cover. If you're very generous, you might say it's an evening star, not really, but if you're generous, goes down, where? To the other side of the Bollinger Bands. This is the stretch I want to go. Next one, the high. You see that one? You want to go with the top? Here you go. You're going to want to go with the bottom? Here it is. Entry, stop loss. Perfect. And it's logical. It's like, okay, it's overstretched. That's why I call this one expander. It's overstretched, right? Next one, you have the correction. You have not a perfect bullish engulfing, but I think it's pretty clear in the message. Then you have a little correction over there. You can maybe construct something else, but I think you get the logic behind it. And it's easy to spot, easy to follow rules. I know, not everybody likes rules, me neither. That's why I constructed the strategy with very simple rules. Sometimes I can't follow them too, but getting better. So, gold, you want to go with gold, you want to go with commodities. Yeah, it's possible also. Daily chart, here's the top, there's the correction, and this is very actual. It's like end of May, like last week. We have some kind of, it's not really a doji, it's not really a spinning top, it's something in between, but you see the indecision and the price goes up. So that's what it is. You want to go intraday? 5-minute chart, NASDAQ. I love the NASDAQ. I'm a day trader, I'm trading intraday. Okay, you're done before the market opens. These are the swings. See? Not really going to the middle. Okay, maybe stop loss, maybe management exit. You have to decide by yourself. But see how beautiful this strategy is. And also, this is from last week. It's not something I needed to look for hours. It's something that pops up whenever you open a chart. Light crude oil, daily chart. You want to go with the bottom? Here you have it. Oh, I like that one. Right? It's easy to spot. Dollar to the Swiss franc. So what else can we say? It's a perfect strategy for me. Doesn't mean that it's a perfect strategy for you, but I present this to you just that you have also the opportunity to think about if this is the right one for you. So as a conclusion, with the expander strategy, it's a powerful strategy. It's a strategy which is easy to spot. It's easy to apply. You don't need to be an expert in everything. You just need Bollinger Bands, and you need to have the knowledge about candlesticks. And that's it. So whenever you like to try it, adapt it, use it. Or if you feel like different, try something else. Trading is individual. So thanks for having me, grazie a tutti, and all the best to you. Bye-bye.